Financial. We got Greg Sarian from Hightower and Bob Pisani's with me here as well. A confusing day, I guess, is the best way we put this. The market's sold off on some off-the-cuff comment from Fed Chair Yellen, and we're all taking it as the new paradigm now or something.
This is as if this were a deposition, and she's stuck with those words. This too shall pass, because the data will continue to change. She's not going to be boxed in. And remember, the market always wants to be there first. So regardless, this is going to change, and we're going to see this many times over before we get to that 6-month gap, mark my words. But one thing I think is clear. You keep rates low for a long, long time, you're going to have bubbles, and we all know that, and she knows that. It's not just farmland.
But you don't think we're at the bubble yet?
Probably not yet, but it could keep going.
All right. Greg, what do you think?
Yeah, we believe we're still in a fundamentally slow growth economy, really a Goldilocks economy. For every 2 or 3 good reports we see a week one, what Janet Yellen told us today is she's going to be supportive, she's going to be accommodative, and I think the risk now on the table for the markets is, will rates move up higher sooner? If economic data continues to accelerate, that's a risk the market didn't have a week ago, which could cause volatility.
Do you think that would hurt the economy if the rates have to have a swifter rise in rates?
You know, I think the market's a leading indicator, and I think the market would react adversely if she even hints about rate increases before the market anticipates.
But our own Steve Leisman got her to admit it's going to be a pretty slow glide path,
exactly
right?
What you said. Look, it was such a great debut until the 6-month comment. And I know she's probably, trying to second guess herself. But let's not worry about it too much. Whether it's March of next year when rates go up, or June of next year, or July, higher rates are coming. And I think that's a good thing. They feel confident enough in the economy to say somewhere down the road we're going to start raising rates. Let's hope that the economic data continues to improve. Let's hope we get rid of QE entirely. Let's hope that rates, we should be higher if the economy is better. I view this as not a negative. I understand why the markets short-term are reacting, but down 100, I'll take that down 100 if we get a little more certain.
We were down 200, and it was just like that at that one point. Are you taking money off the table? Is that what you're alluding to here?
No, I mean, we've just been very cautious. We're worried about downside risk, and we have been for the last 6-7 months. Downside risk is important. But we are continuing to invest, and we're going for quality across the board, even that if that means that yield is not as great. We're not getting married to any part. I mean, this still is very much a trader's market.
Yes, it is.
It is, and you saw that today. That was traders.
Give me a sector that you think is quality right now.
I think right now that you're going to see many of the good financials, believe it or not, are going to get a bit as the yield curve steepens.
And the financials did very well today.
They went up today, even though the yield curve flattened. You're right. Just the prospect of higher rates raised the banks.
Short rates went up today. Long rates did, but not as much.
Flattened.
And the financials did well. What do you like here, Greg?
Well, we still like the biotech sector. It's far outperformed the S&P so far this year. IPOs in the biotech space for the first quarter are up 20% versus the first quarter of 2013. That's a 20-year record high. Large pharma still has a great appetite for life science companies with great ideas. We like biotech. We like small cap. M&A activity is going to trickle into telecom, technology. Small caps also outperformed this year. We think that trend continues as well.
If this higher rate trend actually holds, I'm not sure it will. Be careful. See what happened to utilities today. See what happened to REITs. REITs were down over 2% at one point. Those interest rate sensitive groups immediately tanked. Now, there's one sector. If they hold on to those higher rate concepts, that's definitely going to.
Somebody said to me this sell-off was nothing more than high-frequency noise today, that this was an algorithm that was listening for certain words that she might say. When they heard them, it sold automatically.
I think comments like that are frankly silly. There have been sell-offs long before there were high-frequency trading. There was a good reason for traders to listen to what Janet Yellen was saying when she said 6 months. I popped up because they don't ever make those kinds of time commitments.
Like that. Exactly.
That was a tradable moment there, high-frequency or not. You're kidding yourself.
What were you going to say?
I was going to say that was a Freudian slip on her part. There was no doubt about it. But she might be happy the market's selling off a little bit, too, because she's concerned about bubbles. You know she is.
I think, I was saying earlier, I think she learned what it means to be Fed chair now. Every word is parsed, and when you put a time frame, Ben Bernanke did the same thing last spring when he started talking about raising rates, maybe as early as last September, and we got that huge sell-off in the market. And
the volatility is going to be much greater this year than last year. Investors have to get used to that.
And overall, it was a very good first press conference. Except for that little slip, I thought she was very very poised. If you'll notice, when she read the statement, she looked up several times as if she was partly ad-libbing it. She was really trying to look more conversational. Ben Bernanke never did that. He was looking straight down the whole time while he was reading it.
All right. Thank you, folks. Thank you for your thoughts and everything. Bob, we'll see you a little bit later. So we come to the close of this first day of Janet Yellen's term as Fed chair. Maybe a few more fireworks in the market than she might have anticipated. The Dow down 115 after having been down 200 points at one point. Stay tuned now as they continue to figure out what she meant by 6 months. It's the second hour of the closing bell with Kelly Evans and company. I'll see you tomorrow, Kel.
Thank you, Bill. Welcome to the closing bell. I'm Kelly Evans, and here's how we're finishing a down day on Wall Street. Janet Yellen, in her first press conference as Fed chair, may have had something to do with that. The Dow Jones Industrials average off 112 points. NASDAQ off 25. The S&P shedding 11 points to 1860 there. Keeping an eye on gold as well. That's down. What's happening across the interest rate space, and what does that tell you about the next move here in markets? Let's get right to another special hour of the closing